So definitely have learned a lot of lessons along the way. By the way, Asheville, North Carolina, where I live, got hit by Helene last year, and we survived that with our local businesses, with our Airbnbs and our office and car washes in town. So it's been, and I will say there's a lot of stuff in there, but all the underwriting, all the knowledge goes out the window when the Black Swan events hits that no one's ever,
COVID.
known, COVID. It's like I was running a medical device business and we had all our apartments, and who would guess that there'd be no surgeries?
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, folks. Welcome back to the show. Today's guest, Chris Larsen, is the founder of Next Level Income. He's been investing in real estate over 20 years and is active in the multifamily and senior housing space. Chris, welcome to the show.
Dylan, thank you. I got to correct you. I hate to say it, but it's been over 25 years now. It's crazy.
25?
Crazy. The years just keep clicking. Yeah, I bought my first property at 21 and I'm 47 now. So, yeah.
So I want to dig into this actually, because when people talk about the multifamily space or real estate in general, the common theme that I hear is if you've been able to survive 25 years, that you'll be able to survive anything. Is that true in the real estate space?
You know what? I don't think I can survive anything. Just I'm mortal like all of us. But yeah, I've seen a lot. I've seen 9/11. I've seen the great financial crisis. I've seen COVID. I've seen, the rates go up here with this record inflation that we've seen. So definitely have learned a lot of lessons along the way. By the way, Asheville, North Carolina, where I live, got hit by Helene last year, and we survived that with our local businesses, with our Airbnbs and our office and car washes in town. So it's been, and I will say there's a lot of stuff in there, but all the underwriting, all the knowledge goes out the window when the Black Swan events hits that no one's ever, known, COVID. It's like I was running a medical device business and we had all our apartments, and who would guess that there'd be no surgeries and our residents would be told by the government that they didn't have to pay rent. Who would guess that during Helene, we'd have no property damage, but we couldn't supply utilities. So legally our residents didn't have to pay us. Who would guess that in a place like Asheville, North Carolina, where you have Airbnbs and you've been running them for 5 years with great success, that everything would dry up for 6 months. So yeah, there's some wild stuff that happens out there. So it's always those unknown unknowns that get you.
Now, when people talk about these Black Swan events, they took a lot of people out. In a multifamily space in particular, no one thought that there was going to be like a moratorium on rents in apartments. Why would that ever happen if it's not affordable housing or Section 8? Do you almost give folks a pass in that regard as far as folks who bought too deep during that time period? Or do you have to have some type of ability to manage that risk?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, that's an excellent question, Dylan. So, the senior housing space that we're in now as well, you take that, right? And you say, oh, you should have known that you'd lose 10 or 20% of your residents and you couldn't replace them. Like, how do you underwrite for that? How do you, if you underwrite for something like that, and I was just having this discussion actually yesterday, you underwrite for that and you say, oh, we're just going to have these wild reserves. We're going to have 30, 40% reserves on hand just in case there's a black swan event. Well, you can't underwrite like that because the deals don't make sense anymore. It's like you've got so much cash, nobody's going to want to invest. So do you give people a pass? In a sense, you do. It's challenging when you say, well, could you have predicted that interest rates, the Fed funds rate would go up 500 basis points? No, it's never happened before. COVID hits, never happened before. Helene hits Asheville, can't provide utilities, never happened before. I think, it's understandable that investors, especially if you have investors, would be upset in that situation. But,
Yeah.
as I look at the records and of operators and owners, I look at that and I say, okay, what happened during this time? And 5 years ago, if somebody said, oh, I've never had I've had a capital call, I'd be like, that's a really bad operator. Whereas, during COVID or, after the past couple of years with rates going up, if you have a capital call, that's probably more the norm than not.
I want to ask you specifically about that capital calls, working with lenders. I mean, there was a moratorium on rents, right? So I mean, that's going to destroy your entire business model as a multifamily investor. Were lenders working with their investors at this point in time? Were they understanding of this? I've heard a mixed bag on this. I've heard lenders that just said, "Hey, we're just going to call this due, basically, that we're pinched and this is a tough bag, but it is what it is."
Yeah, I've seen it, and I've got a few different scenarios I can discuss. But yeah, I've seen both sides. So I've seen lenders work, like we've had lenders work with us during COVID. Work with us as interest rates increase. Like I have our office downtown, and my loan actually, I was in the process of refinancing when Helene hit, and we got a loan extension from our bank and work through that process. But for instance, my primary mortgage on our house, we weren't even living here. And I told the bank, I said, hey, like we've got this and this and this happening. Do you have any ability to defer payments? They said, no, like you can miss your payments and go into default and then we'll work with you. You're like, really? Same thing with commercial lenders. Some commercial lenders are more willing to work with you than others. And that's kind of how it works in the business. And like you said, it depends on what they're going through as well. They may not have the ability to work with you.
So, I mean, of course, hindsight is 2020, and it's easy to Monday morning quarterback, that type of thing.
Yeah.
But if there is a moratorium on rents, that just shifts the burden to, and like no one else is feeling the burden other than investors, right? So, I mean, was that? Could that have been done better? Could there have been a moratorium on rents and making your premium payments on?
We had deferred. Yeah. So during COVID, our lenders, most of them allowed us to defer our payments, just put them on the back of the loan payment. So they said, okay, you can skip, say 3 payments, but you got to make them up. And then, with COVID, we had a lot of help because we were able to get COVID loans or PPP loans and then defer payments. And we were able to make up some of the shortfalls with respect to all that. So that situation was more manageable because of the government assistance. Helene, from a local perspective, was actually more challenging because, the lenders basically said, no, we're not really going to work with you. The city said, hey, we need our tax revenue because we just took a beating. Insurance companies they said, sorry, like there's not, you didn't have any property damage. It's not our fault. You don't have utilities, which I understand. Like what's an insurance company supposed to do? That's not their responsibility. So, the point in all this is you want to be diversified. You want to have ample reserves. You want to have a backstop in case something like this happens. But I always tell investors, Dylan, they say, well, what am I not asking? And it's like, well, what you're not asking is what I don't have an answer to, which is, the thing that's going to hurt us is something that we just can't foresee, can't underwrite, can't know. And as an investor, you just have to that's part of the risk that you take, is not having all the information, which is why there's a return commensurate with that.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
That's an interesting situation. There's no utilities. People stop paying rent. What do you do? I mean,
Yeah,
that's kind of awful.
not fun.
Like there's no real solution. I'm imagining
it's
too that
it's real awful. Yeah, it's real awful. I'll tell you that.
You can't sell that deal because no one's going to want to buy a deal where there's no utilities connected, and if people either squatting or not paying right, so you got this mix of things.
Yeah.
I don't want to say that is a common thing that happens, but it does.
No, it's crazy. Yeah.
To use that as a bridge, that there are sellers who are facing some kind of distress from a variety of different angles in multifamily. And so they're maybe more receptive to other types of offers. I was talking to you about this before the show. I've seen more and more people who are now interested in multifamily than I have in previous years. I think a lot because of this distress on the operator side. Are you seeing that as well? And then what advice do you have for folks like myself who are newer realtors, maybe looking to work with investors in this space, and newer investors who are trying to get into the space?
Yeah, great questions. Yeah, we just bought a deal 20% below what the prior owner paid for it, down the Houston market. There are opportunities out there right now. And the market goes in cycles. The market typically goes in about 18-year macro cycles with 2 7-year cycles, and typically kind of a down or sideways period following those 7-year cycles. And you can trace this all the way back to the 1850s. Different assets perform better at different times of the cycle. And, prices are high right now. Interest rates are high right now. Part of the problem with COVID and all the government stimulus, and this is like a real problem in these economic cycles, which is, you have your normal credit cycles that kind of underlie the real estate cycles. Is credit builds and price goes up, you have more credit, land's worth more, you can build more, you can sell a property, buy another more expensive property, repeat it over and over and over again. Works great. However, after COVID, the government pumped so much money into the system and rates were held artificially low that what they did was they created this environment where you had these rents that were increasing so rapidly because of the migration patterns within the country and the lack of supply, that builders just jumped in because money was essentially free. So, owners like us were faced with this reality of seeing supply pop up at 2-3 times the rate that it had before. Now the pendulum is swinging back the other way. And what's happening is supply is going to come back below absorption rate, below the rate at which people want and need to move into housing. And that means that we're going to have, some tailwinds now in terms of rising rents that are going up. The market's becoming more stable. Yeah, interest rates are a little bit higher, but they're workable. So if you have somebody that couldn't weather that storm, that had to sell for one reason or another, you can pick up a pretty good deal right now.
The ability, I would say, for folks to negotiate some of these deals, this is an interesting perspective I'd say I have, because I'm looking at it from the retail lens, being a realtor, but I also have in the back of my mind knowing what it was like as a wholesaler in the distressed seller space. You can if there's enough distress, you can get someone to bite on a creative deal. And you only have to make so many offers. And it is a numbers game. So I think that
Mhm.
there's this perspective out there that like because the property's listed on, Crexy or somewhere else that they just would never entertain a seller finance offer. But I also know personally from talking with guests like yourself that there's multifamily sellers out there who've had their property listed on some of these platforms for like a year and have not gotten anything within striking distance of where it would make sense for them. So that's distress right there. That's I need to sell this now because I've got investors who are upset with me and we're not hitting our pro forma.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, and there's different spaces, right? So like when you move into the assets that we're buying and managing, they're larger assets, right? So you have, our lender is a big institution, a private equity group, Fannie Mae, Freddie Mac loan. So, we're looking at a slightly different scenario where we can't just sell on a whim. If there's a loan there, you have to be considerate of that, the returns of the investors and those sorts of things. If you have a smaller property, a smaller operator, just like I said, with like our office, I was able to negotiate with the bank and work the terms out on the loan with something like that. But if you came to me and I couldn't work that out with the loan, and I had to pay the loan off, that's a good time. That's a good time to reach out to a potential seller. In the senior housing space, one of the things we're doing, Dylan, is after COVID, you saw a lot of these operators get hit really, really hard. And we're looking at HUD loans. We're doing a acquisition right now with a HUD loan assumption, 2.46%. There's 31 years left on the HUD loan. So, if you can go after a seller that, is maybe dealing with some distress or, coming out of COVID and saying like, whew, I can finally get out of this property, get my investors out of this property. It's been 5 years or 7 years or 10 years. And investors are saying, all right, we didn't make any money for the past 4 years, 5 years. We had a couple capital calls. Can you get us, can you sell this and get us our money back? Those are some good opportunities. So if you get creative and you overlay some of these data points, you can find good deals out there.
Now, I want to talk about the sources of financing that people are using to take down these multifamily deals. It sounds like you're working with institutional, more traditional financing. Getting to that point, though, did you use some of these other, sources, whether it was syndication, working with, accredited investors, this type of thing? And do you have any perspective on the various different ways that people are getting into these deals?
Yeah, so that's our primary source of capital, Dylan. So we're getting a loan on the property, right? We're getting that first position loan, but we're bringing in investor capital through our syndications to purchase these properties and do that. Yeah, so that's our primary business model.
Okay, so this is really, I would say, you're the right person to ask for this. Right now, we're seeing so many, and it's probably died down because of the distress in the space. But I've spoken with so many syndicators. The first couple tens of them, I thought, okay, this is really interesting. But now it almost seems like there's a new syndicator everywhere. Do you believe that there's maybe too many people that either got into the space that were maybe a little bit underprepared and saw things through rose-colored glasses? Or do you think that, hey, there's not enough multifamily housing out there? There's this affordability crisis. We need more people to be looking at, development.
Yeah. I think it's a great question. And yeah, one could argue that there was people that jumped into the space over the past few years and shouldn't have been there. We've been in the space. I've been in the space as an investor for 12, 13 years. We syndicated our first deal almost 10 years ago. One could argue that track, that's a fairly short track record in terms of some of the operators in the space. But there's still a need, like supply is starting to drop off. And, I would argue that, I have a friend and he said, oh, private equity is ruining, multifamily because rents are too high. And I'm like, well, doesn't more money and more supply mean lower rents? And it was interesting. Like his perspective was that more syndicators, more private equity was raising rents. But well, I made the case very convincingly with all you got to do is look up the data. I mean, rents have been flat effectively for the past 2 years, so it's actually, the pain that investors are feeling is actually the opposite of the benefit that renters are getting. Now, if I may, kind of look at this from the senior housing space. And you can go to our website, slinvestors.com, for senior living, seniorlivinginvestors.com, slinvestors.com. Dylan, we're only set to supply 25% of the needed supply for our seniors in this country. We're going to have a massive shortfall. It is going to be a crisis. And, our goal is to help solve that crisis. And I just was at the industry conference, NIC or NIC in Austin a couple months ago. And the number one thing was, we need more capital in the space to solve this. We need more capital. And that's really what we need. We need, capital from investors. We need capital from institutions. We need government encouragement, or support for loans and approvals and those sorts of things. I'm a capitalist. I feel like capital flow to problems and solve problems. And if there's an opportunity, capital flows there. And what happens? It's a pendulum, right? So sometimes too much capital flows there, and then the pendulum swings back the other way. So, you just have to kind of, and again, that's why there are cycles to these things, because we always overshoot or undershoot from capital flow perspective.
We are coming up on time here, Chris. I do want to ask you though about, some of your favorite markets or markets that you're particularly bullish on. I think, frankly, with senior housing, it's everywhere, wherever there's aging population, which is everywhere. Yeah. But are there any pockets that you're particularly bullish on, either in multifamily or in the senior housing space?
Yeah. So on the multifamily side, Dylan, we're still heavily focused on Texas markets. We love Houston, which is one of the top 3 markets in the country. Large growing market. Texas has great net immigration. They have, the local governments are very supportive in terms of some of our affordable housing initiatives that they do. Texas is pro-business as well. Florida's great. The Southeast is great. I live in North Carolina. The Carolinas are great. So I think what you want to look at is net immigration. You can go to the annual mover reports that come out from the moving companies, which are really easy and cool to look at. You want to overlay that with states that are pro-business. And then you say, hey, what is, where are people moving? What states are easy to do business in? What have a good quality of life, lower cost of living? You can create a really great list of places to give you an opportunity just with that. We've got a ton of information on our website as well at nextlevelincome.com. And if you search for that, you can find it. Or we got a new tool. You can go to chrislarsen.ai. That's Chris, LARSEN.ai. And you can type in any of your questions. It's got everything from our website on there. You can even have a phone conversation with my clone on there as well.
So did you clone your brain?
I literally loaded. I've got it's been trained with 5 million of my words from my content at this point. So basically everything I've said since let's see here, it's 2025. Over the last 7 years, basically everything I've said or written since November of 2018 is in there right now.
I love that. Chris, thank you so much for coming on the show here today.
It's been fun, Dylan. Thanks for having me.
Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.